If you have been tracking the Iraqi dinar for years, especially as a veteran who understands patience, sacrifice, and long timelines, today's developments deserve a calm and serious look. There is renewed talk circulating about a possible 4.13 rate signal, along with fresh attention on what some are calling a FOREX letter. As always, when numbers start flying through the community, emotions follow quickly. Here at Dinar for Veterans, our mission is not to inflame hope or dismiss it, but to examine what is being said, what is documented, and what fits into the larger economic reality. Let's begin with the number that has everyone talking. The 4.13 figure is powerful because of what it represents. For many holders, that number symbolizes vindication, reward for patience, and long-awaited financial relief. But a number by itself is not evidence. We have to ask disciplined questions. Is this number showing up on an official international trading platform? Is it tied to a formal central bank action? Or is it circulating as a community claim without institutional confirmation? In currency markets, real change is never just a number on a screen. It requires policy alignment, reserve strength, banking readiness, international settlement capability, and political authorization. Without those pillars in place, a headline number cannot stand on its own. The discussion around the so-called FOREX letter has also reignited speculation. When people hear FOREX, they immediately think global markets, institutional screens, and formal communication between financial entities. That is understandable, but even here, context is everything. A letter, memo, or internal communication can signal preparation or discussion. It does not automatically equal activation. In global finance, there are layers of process that occur long before the public sees the final outcome. So the right approach is not to dismiss the letter outright, nor to treat it as final confirmation. It is one piece of a much larger structure. Now let's widen the lens. Iraq's economic direction matters more than any single rumor. The country continues to focus on strengthening foreign reserves, managing gold holdings, modernizing its banking system, and improving compliance with international financial standards. These are not small steps. For a currency to gain credibility, especially on a global scale, the underlying financial system must be stable, transparent, and trusted. Iraq has been working toward electronic payment systems, reducing reliance on cash, and tightening oversight in its banking sector. Those reforms are measurable, they are structural, and they are necessary groundwork for any serious currency evolution. Oil remains the backbone of Iraq's national revenue. Every barrel exported supports government spending, infrastructure, and reserve stability. When oil exports flow consistently and routes remain secure, Iraq's fiscal position strengthens. That does not automatically trigger a currency rate change, but it reinforces the country's ability to sustain one if policymakers choose that path. At the same time, Iraq has been vocal about increasing non-oil revenue through trade, customs enforcement, industrial projects, and regional partnerships. For long-term currency strength, diversification is critical. A nation tied to a single revenue stream is always vulnerable to global price swings. A nation building multiple income channels creates resilience. Gold accumulation is another indicator many are watching. Around the world, central banks have been increasing gold reserves as a hedge against global instability. Iraq has participated in that trend. Gold does not directly determine exchange rates, but it strengthens a nation's balance sheet and signals a desire for monetary security. For dinar holders, it is one more data point showing that Iraq is thinking strategically about its financial future. Shipping lanes and trade routes also deserve attention. Active ports, steady tanker traffic, and functioning border crossings are signs of operational continuity. A country engaged in consistent trade is participating in the global economy. That participation builds relationships, settlement channels, and financial integration. None of these elements alone confirm a rate shift. Together, however, they describe a nation that is not stagnant. Reserve fluctuations have sparked additional debate. When foreign reserves rise or fall, the headlines can cause immediate reaction. But reserves move for many reasons, including debt payments, import financing, currency stabilization efforts, or planned fiscal adjustments. A temporary dip does not necessarily signal weakness, just as a short-term increase does not guarantee imminent change. The responsible way to view reserve data is within the broader fiscal strategy of the central bank. The political dimension cannot be ignored. Currency reform is never purely economic. It is political, strategic, and often timed carefully. Leadership alignment, legislative backing, and executive coordination all influence the pace of reform. Veterans understand chain of command and timing. In national finance, the same principle applies. Even if technical preparations are complete, implementation depends on authorization and stability at the highest levels. There is also growing emphasis on digitization. Iraq has been expanding electronic payment systems, encouraging digital transactions, and modernizing settlement platforms. In today's financial world, a credible currency must move efficiently through secure digital channels. These reforms do not automatically equal a revaluation, but they are foundational. You do not modernize the plumbing of a financial system unless you intend to use it fully. Within the Dinar community, interpretation varies widely. Some believe the groundwork is complete, and only a public announcement remains. Others believe Iraq is still progressing step by step toward long-term stability, without a dramatic overnight adjustment. Both perspectives stem from the same observable developments, viewed through different expectations. The key is to separate confirmed policy actions from projected outcomes. For veterans holding Dinar, this journey has often mirrored military experience. Long stretches of waiting, moments of heightened alert, conflicting reports, and the need to remain steady under uncertainty. It is easy to let excitement override discipline. It is equally easy to grow frustrated and dismiss progress. The balanced position lies between those extremes. Recognize tangible reforms, acknowledge ongoing modernization, but do not convert possibility into certainty without formal confirmation. If a significant currency adjustment were to occur, it would reflect years of structural preparation, reserve management, banking reform, oil revenue stabilization, and political coordination. It would not appear out of thin air. The encouraging reality is that Iraq has been addressing many of those structural requirements. Whether that leads to a dramatic rate event or gradual strengthening remains to be seen. As of now, the 4.13 talk and the FOREX letter remain unverified within official global trading systems. They are conversation points, not confirmed policy actions. What is confirmed is that Iraq continues to reform its financial architecture, expand digital banking, manage reserves strategically, and diversify revenue beyond oil. Those are substantive developments. They matter regardless of timeline. At Dinar for Veterans, we stand for clarity over hype and discipline over rumor. Stay alert, stay informed. Watch official channels, central bank statements, and international financial reporting. In situations like this, strength comes from patience and discernment. The story is still unfolding, the groundwork is visible, the outcome is not yet officially declared. And until it is, we remain steady, focused, and ready, just as veterans have always been.